Let me walk you through one of these indirect method cash statements. So we're always going to start with the cash flow from operating activities. So the cash flow statement has for the year ended because it covers the whole year. So make sure you put that in there. And then we're going to start with the cash flow from operating activities. Because this is the indirect method, I'm going to start with my net income. My net income is given to me in number 1 below. My net income is $22,630. Now I'm going to go through my adjustments, and they want you to label everything out. So we're going to put in net cash provided by operating activities. And then we're going to list out any changes that we had for that operating section. Remember, I said to always start with your depreciation expense because it's not going to jump out at you, but you know you have it. So we'll start there with our depreciation expense. And the difference in my accumulated depreciation between the years is going to be what the depreciation expense was that year. So since I have started with $10,000 in accumulated depreciation, that line right there, and I ended up with 15, that means I must have had $5,000 of depreciation expense during the year. So I'm going to add that back in. Some other things we always look for are if we have gains or losses. Here we sold some land for cash of $4,900, which means we must have sold some land, and we'd have to look at what differences we had there. So you can see the land went down by $6,000. And then we're going to look and make sure that we have no other things going on. But since we got $4,900 for that land, but it went down by $6,000, that means we must have a $1,100 loss on that disposal. So I'm going to include that loss on disposal of land. And my loss must have been $1,100 because land went down by $6,000, but I did get $4,900 cash for it. These are both being added back in to get to that cash piece. Then I'm going to look to my assets and my liabilities. I have a decrease in my accounts receivable. That decrease, if I look at my accounts receivable, is $2,200. And because accounts receivable is an asset, I'm going to add that back in. And finally, if I look at my liabilities, I have also a decrease in my accounts payable. And because I have a decrease, I'm going to subtract that. And that difference there is $18,730. If I total this all up, it's going to give me a total decrease of $10,430. Which then tells me my net cash provided by, because it's positive, provided by the operating activities is going to be the difference between my net income and these adjustments I'm making to bring it down to cash, which is $12,200. Now we're going to look at the investing section. In the investing section, again, we're looking for changes really in that property, plant, and equipment, or long-term assets. So first, things we want to do is just label cash flow from investing activities. Because that's what's next. Now I did get some cash for that sale of land. So that cash would go here. And that cash was $4,900. And since that's really all that happened in the investing activity, we're going to move on to our financing activities. So I'm going to say label it out, my cash flow from financing activities. And then I'm going to list out anything that I received some cash for that goes into that financing. I know common stock is one of them, and I can see my common stock increased by $6,000. So I will include that in my financing. And that's 6,000 increase. And then in number 1 down here, besides telling me about my net income, it also says that I paid dividends. Dividends are part of that financing. So I'm going to include my payment of dividends. And that's a cash outflow, so I'm going to subtract that. I'll total that up to get to 13,500 decrease. So since this is a decrease, I'm going to label this net cash used by financing activities. So now I have my 3 sections done. What I want to do next is just kind of reconcile this to my cash. So I'm going to look at what is the total net increase to cash. I get this by totaling my 3 sections. I'll take that $13,500 from my financing, the $4,900 from my investing, and the $12,200 from my operating. If I add those 3 numbers together, I should get an increase of $3,600. I could look at the cash at the beginning of the period. Which they give to me is $10,700. And if I add those 2 together, it should equal my cash at the end of the period. And hopefully it does. 2,300. And I look, I check, that is my cash at the end of the period. So that means I must have done it all right and I have everything included. They also want you to look at, well, what is my free cash flow in this problem? And now let's take a look at free cash flow. Remember, your free cash flow is your net cash provided by operating activities. And we would subtract out any capital expenditures and subtract out any dividends. Here, our operating activities were $12,200. I got that from my statement of cash flows right here. I have no capital expenditures, and then my dividends were $19,500. Therefore, my free cash flow should be actually a negative 7,300. So hopefully that helps. If you have any questions